Hey guys, Tom here from the Investing with Tom YouTube channel. Welcome back to the channel. If you enjoyed today's video, hit like, hit subscribe, and that way you can see future videos as well. So this is going to be our regular quarterly 13F filing update. It's a video series that I do every quarter on the channel. And basically, if you're not familiar already, a 13F filing is a filing that large investors in the US have to make every single quarter. So if they're managing more than 100 million US dollars as it stands right now, they have to disclose every single quarter what their current portfolio holdings are, and that allows us as small investors to go in and see what the likes of Warren Buffett and Mohnish Pabrai and Charlie Munger and all these great investors have in their portfolio, whether they've made any changes to it in the past few months. And although we don't necessarily go out and just copy their ideas straight up, it does allow us to get a good group of companies to continue looking into. If it's already shown up as a big position in Warren Buffett's portfolio, it's probably passed a fair few sniff tests to kind of get there. So today we're going to go through a group of investors that I follow every single quarter. I'm also going to introduce a new investor that I haven't talked about in these updates before. That's something I try and do every single quarter. And you'll see timestamps right along the bottom of this video of all the people that we're going to talk about. Now remember, with these 13F filings, there's always a few things to keep in mind. So these are only going to show us the long only straight up stock investments that these investors have made. So if they've got any option positions, or if they're short any stocks, or if they have any stocks outside of the US, we're not going to see those investments. So it's important to keep that context in mind when we're looking at this. If you see an investor that invests a lot overseas and you find that they only have one or two investments in their 13F, it's probably because a large chunk of their portfolio is not in the US. The other thing we've got to consider is potentially how much cash they have in their portfolio. They may not even be fully invested. They may have half their funds sitting in cash, which is exactly what we're actually going to see with Philtown, which I'll talk about shortly. Philtown actually doesn't file a 13F, but through some other SEC filings, we've managed to get some portfolio data from Philtown's fund, and that actually is quite unique because it does include cash and options, which the 13Fs don't. Now, right off the bat, we have three investors who we're going to be able to give you an update for very quickly, and that's basically because they've either made no changes at all to their portfolio or they've made very minimal changes. Now, the first person we're going to talk about there is actually Charlie Munger. Charlie Munger, obviously being Warren Buffett's longtime business partner at Berkshire Hathaway. He actually has an investment portfolio that he runs through a business called the Daily Journal Corporation. And Daily Journal Corporation, just as a quick aside, it's actually a company I'm looking into at the moment. There's potentially a bit of hidden value in there. So once I've done some work on that, if you're interested, I might put a video together on Daily Journal just so you can see my thoughts on all of that. But in terms of Charlie Munger's portfolio, we see no change, and we haven't seen any change for years at this point. So just to quickly run you through what he's got in there, basically he bought a couple of the big banks during the financial crisis in 2008-2009. So his portfolio very much still reflects that, and he's got some big gains baked in here. So basically we've got Bank of America representing 56% of the portfolio, Wells Fargo representing 38% of the portfolio, US Bancorp representing 5%, and then we also have a position in POSCO, which has not been a good investment actually for Charlie Munger. He just kind of left it in there, and that is currently sitting at a tiny little 0.4% of the portfolio. So very quick update for Charlie Munger, no changes at all, and that's where he sits within his Daily Journal Corporation portfolio. Now next up we have Mohnish Pabrai, the inspiration behind the moustache you see on this beautiful face, and basically Mohnish Pabrai has a very, very tiny change to his portfolio, basically no change, but let's just give you an update on what's in his current US holdings. So firstly, his biggest position in the US at least is Micron. That one's been in there for close to a couple of years now. He had a very, very small change, so he owns about 1.8 million shares, and he had an increase in share count of 74, so basically zero change. It's about an $85 million position at the moment. The website I use, Whale Wisdom, is estimating that he has an average price in Micron of about $38. It's currently trading at about 61, so he's got a good gain on that so far, but nothing spectacular. He hasn't got a double or triple or anything in Micron, at least not yet. So that's his largest position there. He also has a $63 million position in Heritage Growth Properties. Now, this is one that I've covered on the channel extensively, so I won't talk about it in too much detail today. But basically, SRG is a REIT, Real Estate Investment Trust. They're going through this long pipeline of redeveloping a whole lot of properties in order to increase the rents and so on at those different properties. And that initially came on my radar because of this investment by Mohnish Pabrai. So that is Mohnish Pabrai's update. Basically no change, still holding Micron and still holding holding Sharesight growth properties. And the third and final investor that I talk about on the channel every quarter, but also has no update for this quarter, is Guy Spier. Now, Guy Spier is the author of one of the books behind me. I'll put it up on the screen here. The Education of a Value Investor. Fantastic read. Highly recommend it. So let's have a flick through Guy Spier. Guy Spier's portfolio. He does hold quite a number of positions. And it's interesting because I think since I've been following Guy Spier, we often haven't seen huge changes in his portfolio quarter to quarter. He's very good at just holding his existing investments, but we pretty much always see at least small adjustments around the edges. So to see literally 0 shares change at all quarter to quarter is interesting. So here is where Guy Spier stands. So currently he has 3 investments over $20 million. So the biggest one is Berkshire Hathaway, the second largest one is MasterCard, and the third largest is American Express. So those make up a big chunk of his portfolio, sort of 15 to 20% each in each of those positions. He also has 12% of the portfolio on Bank of America, around 10% in Ferrari. We actually see Berkshire Hathaway A class shares here again, so actually that Berkshire position is probably a bit larger than 20% because he's got both the Class A and the Class B shares. Still holding Fiat Chrysler, still holding Moody's. He does have a position in Sharesight growth properties and Micron as well, so those are about 3 and 4% of the portfolio. And really after that, it's just kind of small positions around the edges. So that's where Guy Spier sits. Nothing too interesting to kind of write home about other than he's holding his existing investments. He has been a long-time holder of Sharesight, which is, again, one I'm keeping a close eye on. And I believe he bought a little bit more of Micron last quarter, which I don't own personally. I just can't get my head around it. I need to do some more work on it, but that's kind of where I'm at with Micron. So that's Guy Spier. So let's keep moving along. Next, let's talk about Warren Buffett and the big dog, Berkshire Hathaway, because he has had some quite significant changes in his portfolio in the last quarter. So let's dive into that. Okay, now before we get into some of the changes with Berkshire Hathaway's portfolio, just a couple of things to keep in mind. So Berkshire Hathaway is Warren Buffett's holding company. It's been an investment that he's had for decades and decades and decades at this point. It's basically been the vehicle that he's used to build his wealth over time. But there's a few things to keep in mind. So again, this is not going to be just Warren Buffett. This is going to include a couple of other money managers. So we have Ted and Todd, who each manage, I think, about $10 to $15 billion at this point. So if you see any smaller positions, those will often be Ted and Todd. If it's a massive like 10%, 20% bet or more in the case of something like Apple, for example, that's pretty obviously going to be Warren Buffett. But a few things to keep in mind there. The other thing of interest is that some of Berkshire Hathaway's subsidiaries will also own securities. So for example, a couple of quarters ago, we saw an S&P 500 index fund show up in Berkshire Hathaway's 13F, and people were quite confused about that. And basically that was because it was coming from one of the Berkshire insurance businesses kind of owning that in their insurance portfolio. So a few things to keep in mind there, but largely if we see a really massive change in the portfolio, it's pretty much going to be Buffett. So in terms of some of the changes, there's actually kind of 3 main takeaways that I have from Berkshire Hathaway's 13F. So firstly, let's start at the top. By starting at the top, I mean Berkshire's biggest position, which is Apple. At the time of this filing, that makes up close to 50% of his portfolio, about 47% of the portfolio. And Buffett is famous for buying into great companies and never selling them. But in this 13F, we have a slight reduction in the Apple holding. So we have about a 3% reduction in share count. And there's been plenty of videos on YouTube around what people think might be going on here. My perspective on this is that there's potentially a couple of different things that have happened. So either it is a Ted or Todd move. So they were actually the first ones to get into Apple at Berkshire Hathaway. They did that before Warren Buffett actually sunk the tens of billions into Apple. So potentially this is Ted or Todd selling their entire stake in Apple. That could move the needle this much potentially. So that's the first possibility. The second possibility is Warren Buffett is genuinely trimming this position. He's taking some money off the table, which is a rare move. And if it is the case, then potentially he's learned a lesson from something like a Coca-Cola investment. So just to rewind the clock a bit, Buffett put about $2 billion into Coca-Cola in 1980, somewhere in the 1980s. It was a massively successful investment. It was more than a 10x through to sort of the 2000s. And if you watch some old Buffett interviews from in the 2000s, he was sort of saying that, Coke has been a phenomenal business. It'll continue to grow. even though the price is really high, we're kind of happy to hold it because, you know, we own so much of the company, it would be hard to get out. We don't really have anywhere better to put the cash at this stage. And basically, looking back on it later, Buffett actually said that was probably a mistake not to sell Coke, because Coke pretty much just went sideways for 10 or 15 years after that. So price matters, and even great businesses, if the price gets up high enough, the future returns can be lower. So in Buffett's mind, he has potentially sort of front-loaded a lot of his returns from Apple in this investment if he continues to hold it for sort of 20 years. So if he's perhaps learned from that and, you know, is taking some off the table, that's kind of the other possibility I have in my mind. So hard to say what's happened with Apple, but that's at least what's showing up in the 13F. The next big change I want to talk about is some of the financials. Over the past quarter or two, Berkshire has been taking a lot of money off the table with some of their bank investments. So they, for a long time, were big investors in Bank of America, Wells Fargo, JP Morgan, a whole bunch of banks. Buffett is arguably, or even barely arguably, he probably is the best bank analyst on the planet. He's got a long history of investing in banks, and he's almost never been wrong, frankly. You know, he has had mistakes when it comes to retail investments or technology investments with IBM, for example, but it's hard to think of a case where he's been dramatically wrong on a bank. He's incredible at analyzing those situations. Perhaps Solomon Brothers might be an exception. That was probably more of a management issue rather than the actual sort of fundamental business. But anyhow, let's look at some of the changes. So firstly, with Bank of America, so Buffett sort of continues his love affair with Bank of America. He's increased his holding by about 9%, and that is the second largest position in Berkshire Hathaway's portfolio. But we have a couple of reductions in other businesses. So the Wells Fargo position was pretty much cut in half. That is down about 46%. Previously was 3% of the portfolio. It's now down to about 1.3% of the portfolio. And he's also continued to trim some of his other smaller bank holdings as well. So PNC Financial, for example, was reduced about 64%. JP Morgan, he almost got all the way out of. That was down about 95%. He sold out of that position. So some big reductions in the financials there, and just a little one I'm going to chuck in here. So one of the big news stories last quarter was, you know, Buffett's making this big investment in gold, which was the Barrick Gold business. He's reduced that holding about 42%. So it's not something he's holding for the very long term by the looks of that. And my guess is it was probably a Tettleton investment anyway, but who knows, maybe we'll find out if Buffett tells us in an interview at some point. So those are sort of the first two things from the Berkshire Hathaway 13F for the Apple reduction and the financial reductions. There is one sort of group of businesses where he's added to quite significantly, which is actually the pharmaceuticals. So when I first saw this, I saw Buffett had put about 1.8 billion in each company into a few different pharmaceutical businesses. So just to let you know what those are AbbVie, Merck & Co, and the third one is Bristol Myers Squibb. So each of those businesses got about $1.8 billion invested into them. We also saw a smaller investment in Pfizer. That was only about 130 million, small by Berkshire standards. So whether that one's going to grow to be 1.8 billion as well, I'm not sure, but that's kind of where we're at. And when I first saw this, I had this kind of memory jog. So one of the things I've done over the last year or two is I went back and watched basically every Berkshire Hathaway annual shareholders meeting ever. And as soon as I saw this news, my mind, it sort of jogged my memory on something that I'm sure I heard Buffett say once, which is, I think he said it in about 2000, and I did actually manage to find the clip last night, so I'll leave that link down in the description. But in around the 99/2000 year annual meeting, he was talking about how he really missed out on investing in pharmaceutical businesses. And he also said it was kind of hard to invest in that industry because he, although he was sort of bullish on pharmaceuticals in general and the profitability of those businesses over time, he really didn't know which one would be the winner. So if he was to make an investment in those companies, he would have done sort of a basket bet by a group of them, and that's sort of the way he should have done it. And Charlie Munger went on to sort of call both himself and Buffett idiots, and they missed that opportunity and all this sort of stuff. And basically, fast forward 20 years, that is exactly what Buffett has done now. He's made that basket bet on the pharmaceuticals. So it'll be interesting to see how these businesses play out, and I'm really hoping that when the next shareholder meeting rolls around, we get some commentary from Buffett on how he thinks about that. So again, I'll leave that clip link down in the description, but that was the other big news story out of Berkshire Hathaway's 13F. Okay, let's keep moving. So the next 13F we're going to look at is Li Lu at Himalaya Capital. Now, Li Lu, for those who don't know, is the only fund manager that Charlie Munger up here has ever given money to invest. And he, over the past few quarters, past a year probably, has started to invest more so in the US. So traditionally, Li Lu has a large chunk of his portfolio in China. I suspect he still does have a large chunk of his portfolio in China. But we've seen some US holdings start to pop up more recently. When I first started covering Li Lu's 13F, I think for the first 2 or 3 quarters there was literally nothing in it. So when something finally turned up, I was super excited to see that, and we do have some more changes this quarter. So basically, Li Lu has 4 holdings in the US. He has Micron, Facebook, Bank of America, and Google. And 2 of those positions have had updates. So Micron has increased by about 15% in terms of the share count, and it's a massive position. It's over $500 million now. If you look on Whale Wisdom, you'll get this column called ownership, and you'll see he now owns about 1% of the entire Micron business. So it's a substantial holding, estimated average price of about $50 a share. It's currently trading about 60, so he's up maybe 20% on that position so far. But we've seen a few familiar names in here. So we've seen Li Lu, we've seen Spier and Mohnish Pabrai all in Micron. And they are not the types of investors that invest for small 10 or 20% gains. So I just can't get there with Micron, at least not yet. But it'd be interesting to see how that one plays out. So that's Micron. Facebook also had an increase in holding, and he more than doubled that investment. So he increased his share count by 118%, and that is now about a $350 million position. So not as big as Micron, but still substantial. Still owns Bank of America and still owns Google. So no change in either of those last 2. So in terms of his US portfolio, again, this percentage portfolio is going to sound very high because it doesn't include cash or Chinese investments, but Micron's about 41%, Facebook is about 26%, Bank of America about 22%, and Google about, call it 10%, we'll round up slightly. So those are some investments from Li Lu. Both Facebook and Google are stocks on my watch list that I've been following for a little while. So interesting to see Li Lu double down, particularly on the Facebook investment there. So let's keep moving, and let's talk about one of the new investors that I want to show on this series, and that is Seth Klarman at Bellpost Group. Now, Seth Klarman at Bellpost Group is one of the best-known value investors on the planet. He's compounded money at close to 20% per year since starting his fund, and he also happens to have about the most expensive investing book on the planet. So he wrote a book called Margin of Safety, and it was sort of, they did a limited run of prints, basically, and it hasn't ever been reprinted as demand's kind of gone up for the book. So it costs like $1,000 on Amazon and eBay and that sort of thing now. I think Seth Klarman probably just likes to have that title of the most expensive investing book. But anyway, let's get into his 13F. So Seth Klarman does like to have a few more positions than someone like a Warren Buffett does. He often gets compared to Warren Buffett. Buffett being the Oracle of Omaha, Seth Klarman often getting called the Oracle of Boston. So let's kind of run through what he's got in here. So a couple of key changes. I guess the first one is his reduction in his holding in eBay. So eBay has been Seth Klarman's biggest position for a little while now. That's just reduced slightly. It's reduced about 6%. We have a very small change in Fox Corp Class A reduction of about 1%. But a couple of the bigger news stories. So we have an increase of 18% in his holding in Viasat. Now, I don't know that much about Viasat. I did a bit of Googling last night and found that Seth Klarman actually owns over 20% of this business, and they specialize in sort of the telecommunications, satellite service kind of business. I don't really know that much about it, but certainly interesting to see Seth Klarman own a big chunk of that business. The stock has been hammered throughout the year, and the price has gone down a lot. So Seth Klarman obviously thinks it's good value if he's sort of loading the boat up a little bit here. And he's owned it since 2008. So one of the cool things you can see in some of these 13F filings is when these investments were first made. So Klarman has owned that business for about 12 years, and he's made a big change in it just in this last quarter. So that was that one. A couple of other interesting things. So PG&E was added to the portfolio. That increased 551%. Granted, that's off a very small base, so it still makes up about 3% of the portfolio. And many of you might be familiar with PG&E. So PG&E is basically a utility company that went bankrupt, and they were to a large extent blamed for many of the forest fires in California. They've gone through bankruptcy, they've been sort of restructured and come out the other side, and Seth Klarman obviously likes it. He's added it to his portfolio in a big way. It's close to a $300 million position in that portfolio. So that's PG&E, and probably the biggest talking point, the one that got the most attention from Seth Klarman's 13F, would be his investment in Pershing Square Tontine Holdings of about 4% of the portfolio, or right around about $400 million. Now, Pershing Square Tontine Holdings, for those that don't know, I've actually got a video on it on the channel, so go and check that out. It's Bill Ackman's SPAC. So Bill Ackman basically launched the biggest SPAC, or special purpose acquisition company, in history. Basically, this company is designed to just be a pool of cash, and the shares for that pool of cash are sort of publicly traded, so you can buy and sell shares in this Pershing Square Tontine Holdings, which is exactly what Seth Klarman's done here. And the purpose of that SPAC is to go out and basically purchase private business. So effectively what Seth Klarman has done here is he's handed his money over to Bill Ackman to go and make a potential investment. And in my mind, there's only sort of a couple of reasons why you'd buy into a SPAC. Either you want to hand your money over to the investor because you really believe in them, which is probably what's happening here with Seth Klarman. Potentially you can buy the SPAC at a discount to cash. So maybe they've got $20 a share in cash and you can buy it for $15 or something, so you're getting sort of a margin of safety there, even if they make a poor investment. Or once you actually know what company they're buying, then you can do some due diligence on the actual business and make a call from there, just like you would with any other company. So as far as I know, there hasn't been an investment made yet, and there's been very little news come out of Bill Ackman's SPAC. So really interesting to see Seth Klarman make such a big bet on that at this stage. So interesting to see how that will play out. I'll certainly be keeping a close eye on it. Okay, so that is all of our 13Fs updated for the quarter, but we do actually have one more portfolio update, and that is for Philtown. Now, interestingly, Philtown doesn't actually file a 13F. He's not quite over that $100 million threshold, and simply the way his fund's structured is a little bit unique. So, I've written it down here. He doesn't file a 13F, but he does file something called a Form N Port. It's part of his Ruler X fund, RULIX, and it's part of the World's Funds Trust. So kind of interesting structure, but it does allow us to see sort of regular portfolio updates, and the update that we're going to talk about today came out and sort of lines up with the same dates as the 13Fs. So in terms of the things that we're going to look through, and just before I look through some of these positions, I need to give a couple of shout outs. So firstly to Brad Kellner, because I'm using your spreadsheet, Brad, if you're watching this video, because the data that comes out for Philtown, sometimes it's really nicely formatted, sometimes it's not. In this later case, it wasn't. It was simply just a real rough kind of list of current holdings. So Brad went through and sort of compared it to the previous quarter. Also, shout out to Warren. I won't mention your surname because I don't know that you want me to, but shout out to Warren, who basically sent me the same thing. That was really useful to sort of put this together as well. So in terms of Philtown's holdings, we're going to talk about a couple of things. So we're going to talk about the stocks that he owns, and since Philtown does have this sort of unique filing, we get to see a bit more info. So I'm also going to talk briefly about his cash position, and in the past I've talked about his options. I'm just going to talk about options on one particular stock because it's new that he's added recently. So in terms of the changes, his largest position is still Bank OZK. He increased his share count about 71%, so he bought a lot of stock through the previous quarter. And that's now about a $14 million position for Philtown's fund. So that's the largest position. CF Industries also increased a lot. So that went up about 112% in terms of the share count. It's now about a 7.5% position in the portfolio. And it's worth about $7 million. So that's CF Industries. They're basically a urea fertilizer producer. They have low-cost natural gas, so they can produce nitrogen fertilizer a lot cheaper than other businesses. So that's CF Industries. A couple of other stocks where the position was basically doubled. So Gildan Activewear, again, sort of a low-cost producer of clothing, and a stock that Philtown has spoken about quite extensively on his podcast in the past. He's made a lot of money in that business before when they've been through previous crises. So that's Gildan Activewear. Interesting to see Spider Gold ETF. So this isn't necessarily a company. This is literally just gold. Philtown is a avid follower of Ray Dalio. So the way I see this position is it's sort of an alternative to cash in my mind. So Philtown does have a large chunk of the portfolio in cash. He's put some of that cash into gold, and I think if the opportunity set was great enough, he would put a lot of that cash to work in buying stocks, obviously, but after that he would probably put some of that gold money into buying stocks as well. I think that's sort of a hedge to anything crazy happening with currencies at the moment. And I would expect that it's sort of just kind of a store of value until he actually puts that money into businesses. So interesting to see that nonetheless. We also have a 20% increase in the position in Armada Hoffler, which is a REIT. And then we have a bunch of stocks where he's made no change. So Sturm Ruger & Co., Berkshire Hathaway, Boeing, Ulta Beauty, and Seritage Growth Properties. So Philtown is also a holder of SRG. And all tallied up, that makes up about 55% of the portfolio. So Philtown still has a massive chunk of the fund sitting in cash. About 45% worth of the fund is sitting in cash, about $43 million out of the $95 million in the total fund. So huge cash position. Philtown has been saying for years, probably for as long as I've been investing, that the market is overvalued and he's waiting for a big crash and he's got a watch list that he's going to sort of load up the boat with. So still waiting for that. I think he's going to be very, very well prepared if we do see some dramatic declines. But fairly bearish on the overall market, I would say, still Philtown. But interesting to see him adding to some of the existing positions nonetheless. So last thing I just want to talk about is one of the new option positions. So these option positions often tell us basically stocks in Philtown's watch list. So in previous filings, we've seen Philtown basically display all the put options that he sold, which is basically Philtown selling insurance to existing holders of those particular stocks and saying that he'll buy them if they get down to a certain price. If they don't get down to a certain price, he sort of just collects the insurance premium and produces some cash flow from that. And one of the new stocks that showed up in his options portfolio in the latest filing was a business called Huntington Ingalls Industries. Again, I don't know a huge amount about this company other than what I get from a quick Google search, which is basically that they are a shipbuilding business. They are America's largest military shipbuilding company and a provider of professional services to partners in government and industry. I literally just read that off the Google search. I have not done any research on this business at all. But nonetheless, we know that Philtown has a strong military background, so interesting to see both the gun company with Sturm Ruger & Co. and also Huntington Ingalls Industries both get sort of added in. So he's yet to have this actual stock holding in this business, but he does have some options in that company. And just to explain the strategy a little bit more, basically my perspective on it is he's selling insurance on these businesses. If they get to a certain price, if they go down a lot, he's obligated to buy them, and he's buying them at prices he'd be more than happy to own them at. And if he doesn't get a chance to buy them, if they don't go down to that price, he basically just collects the insurance premium on those stocks. So I'm just going to pull out a bit of writing that Philtown did around the strategy, just so you got to get a feel for kind of how Phil is thinking about this. So he says, I decided to generate cash flow by selling, and this is actually referencing Boeing stock with this example he's talking about here. So I decided to generate cash flow by selling one tranche worth of the $350 strike puts. The idea was to collect the cash for being obligated to buy the stock at $350, then when put the stock to sell the calls at $350 to exit. This is usually an effective tactic to create cash flow for the fund, and over time, when executed successfully, it reduces basis and risk. So an interesting strategy from Philtown. Effectively what he's saying is if he can continue to write these options, he's collecting money on these stocks that he'd like to own, even though he doesn't effectively own them. And when he does get to buy them at, say, $350, he's also collected some insurance premium on those stocks in the meantime. So his effective cost into those stocks is actually much lower than the $350. So interesting strategy nonetheless, and that is all the portfolio updates for 13Fs and so on that I have for you today. So I do hope you enjoyed it. If you did, please hit like and hit subscribe, and I will see you in the next one. Cheers. Mochik.